I just tested my two most used entry types and the results completely blew my mind. One of these entries was responsible for most of my losing trades and I didn't even realize it. Personally, I felt betrayed. But if only I had taken one of them, my profitability would have skyrocketed to 80%, which means I have been leaving money on the table this whole time. So let's look at the data and find out which one was the trap. I took multiple trades to help me figure this out. The first risk entry was on EURUSD. I had to watch this trade play out as it looked like it was going in my direction, and then it took all the profits and hit my stop loss. You also thought it was a mistake, didn't you? No, it's not a mistake. Look closely, there's a pattern here. Let's go deeper into the rabbit hole using a different entry on GBPUSD and lock in using the open entry. Trade not triggered, but still hunting me out. So I had to wait for price to play out a bigger and different market structure, a pattern we all know. Throughout the investigation, what I found out is gonna make you ask yourself the very same questions. We got the confirmation, entry on the breakout, irregardless price hits the stop loss. Hold on, you can't escape it until you fully understand it. All the losing trades had one thing in common, a breakout. This is very important. An outlier that separates risk entry with the open entry, an approach that provides a 40% win rate with the approach that provides an 80% win rate. Irregardless of you waiting for a breakout on your descending channel, or you waiting for a breakout on the neckline of your double top, double bottom, or better less, you waiting for a 50-50% chance of any breakout on your triangle wedge. Still, we can go as far as even pinning down your structure breakout. I'm talking even example, your all famous head and shoulders neckline breakout. By this time, in case you haven't figured it out, the winner is clearly the risk entry. But there is a reason it's called the risk entry. That may mean you may get stopped out easily, but the numbers don't lie. Let me show you. Price is clearly going into a bullish uptrend, right? But we also have this resistance over here, giving us a full clear channel pattern. Now, if you look very closely, you can see that price is in a retest area, which means price may continue to go to the downside. Now, if I'm looking for sales in this, and I already have my confirmations of this channel pattern, of where price is doing a triple touch on the top, if I were to enter using the open entry, I would normally wait for price to actually break this below for more confirmation, right, and chase it to the downside, right? That could easily be how I enter this using the open entry. But remember, right now we actually targeting to use the risk entries. Now let's see if we can find a risk entry at this point. Right, let's see what price does. Perfect. We got the risk entry. Let's go to our small time frame. So we usually enter on the smallest time frame, which is being your 15-minute time frame, which is being your 15-minute time frame. So we're gonna enter on this trade. Short position. We have all the confirmation you can need, guys. Price has already confirmed to us that it's respecting this level and confirming this triple touch over here, right? Giving us the perfect risk entry. Now, I don't have my targets first set over here, so let's try and find where we're going to be going out, which is more important than getting in on the trade. If you don't know where you're going to go out, don't even enter the trade. Now, look closely. We have these levels over here, our first levels of resistance. So we know the support level over here may actually trigger more buys. We also have this second level over here, which we know may trigger more buys. But understanding the Falcon strategy, we know that price is most likely to go a 90%. So this is where price most likely can come back to. Now, let's see what price does, right? Let's see if price can hit our stop loss or price will hit our take profit, right? We will also try to do a break even once price reaches this first target over here. Okay, price is retesting. Price is retesting. Oh, take profit hit. Take profit hit. Now that's the power of the risk entry, right? This does not conclude by any means that open entries are not profitable. If I were to actually enter this using the open entry, this is what I would normally do. I would wait for price to actually break this. Remember, break out. This is your open entry, right? And usually maybe set my targets above over here, right? Imagine that. Imagine my stop loss being that big, right? But I understand for most traders, it's not even about the size of the stop loss, it's about giving it enough room for price to breathe in. Now, if that was the case, where would your targets be if this was a risk entry? Your targets would have to be all the up to down here, right? Now, let's play it out and see what would actually happen. Price would have hunted your stop loss and took you out. Anyway, if you got this far, like I said, I really appreciate it. Click the like button. Let me know which entry is best for you, the risk entry or the open entry. My name is Types of Pitting. I am the youngest, most goated, underrated trader in South Africa. Yep, that's me. So if you wanna see that happen, wanna see me grow, you wanna be part of the family, click the subscribe button and be notified next time I drop. And for those who want more information, watch this strategy over here as I break down these very two entries step by step.
Who else in this family have you ever seen who sits in front of a laptop and makes money? So there's no reference.